Now coming to the eighth question here, which is towards the trial balance of Vishal Limited is as follows: as on 31st of March 2016, and here the authorized capital of the company is 5,000 equity shares of 100 each. So whenever the information towards the authorized capital is being given, okay, you are supposed to show this, authorized capital under the share capital, okay, and underline the amount as well. So 5,000 into 100, 5 lakhs is the authorized capital. But if you just look into the given balances, okay, in the trial balance, so as I already told you all that all the debit will become a part of either the expenses or the assets, and all the credit balances are the part of either the incomes or the liabilities. So starting with the first balance which is being given towards the share capital. So out of the 5,000 equity shares which the company is being authorized, so you can assume that the company has issued only 3,000 shares, and also it's been subscribed by the public as well. So 3,000 shares which is at the rate of 100 each, which is 3 lakhs of rupees. So this will be shown as an issued capital, followed by the subscribed capital, and also the called up capital under share capital, okay, in the balance sheet. And followed by, we also have calls in arrears. So whenever the calls in arrears is being given, to the extent of the calls in arrears, that is 16,000, you are going to minus it from the above capital, that is 3 lakhs. So 3 lakhs minus 16,000, the balance of the capital will be shown as the paid up capital in the balance sheet. Okay, so share capital minus the calls in arrears will become the paid up capital in the balance sheet, that too again under the share capital subhead. Then followed by, here we have the reserve fund. So reserve fund, the other name for the reserve fund here is the general reserve. So the reserve fund has to be shown under reserves and surplus on the liability side. So now whether it is a debit or whether it is a credit, with that note itself you can easily understand whether it is going to be an asset, expense, or liability or a income. But here when I have explained you all about the calls in arrears. So the calls in arrears was showing a debit balance. So in spite of being a debit balance, I have neither taken this into the expenses or nor shown this as an asset here. So it so happens sometimes in the case of some of the accounts, okay, irrespective of its nature of the balance which whatever is being provided, okay, we have to show this very much onto the opposite side. But when you are showing this as, I mean, when a debit is being shown, instead of an asset, when you're showing this as a liability, but this liability, I mean, on the liability side, we are not showing this amount directly in the outer column, but we are making this as an adjustment against the capital. So this is what you need to understand. So whether you are showing any amount, okay, opposite to the balance which is being given, but that becomes very much as a deduction rather than showing that balance directly in the amount column. Okay, now coming to the next one here, the buildings. Now the buildings will be shown under the fixed assets. So again, under the fixed assets we have a group called as a tangible asset. So show buildings under tangible assets. Then followed by, here we have fixed deposits which has been unsecured. So because it's been given under the credit, then that means it becomes a part of a liability. So therefore the fixed deposits which have been unsecured can be shown under the long term borrowings, or otherwise you can also put it under other long term loans. Then followed by, we have wages. So wages will be taken under the employee benefits. Then we have machinery, followed by the furniture. So the machinery and furniture are very much a part of the tangible fixed assets. So therefore it is to be taken into the balance sheet onto the assets side. Then we have purchases, followed by the sales. So I hope everyone is aware of the purchases always shows a debit balance, and the sales always shows a credit balance. So the purchases will be taken against the purchase of stock in trade in the profit and loss account, and the sales will be shown under the revenue from operations. Then we have salaries. So salaries will be taken again under the employee benefits. Then we have debtors and the creditors together. So the debit is always debtors amount and the credit is always the creditors, because debtors is always an asset and the creditors is always a liability. So the debtors will be shown under the trade receivables and the creditors will be shown under the trade payables. Now then we have the bills receivable followed by the bills payable. So similar to the debtors and the creditors here, bills receivable is always a debit balance and the payable is always a credit balance. So therefore bills receivable is an asset and the bills payable is a liability. So again the receivables and the payables will be shown accordingly under the trade receivables as well as under the trade payables. Then we have the director fees, and the director's fees is a part of the other expenses. So show it under the profit and loss account under the group called as other expenses. Then the next item here we have the returns. So this returns is towards the purchase return as well as the sales return. Now when you are looking into the given balances, that is under the debit as well as the credit, so the easiest way to understand what is which returns, like which one is a purchase return and which one is a sales return. So if you just look into the amount of the purchases as well as the sales, the purchases are always debited. So when the purchases are debited, the purchase return is always credited, that is always onto the opposite side. And when the sales are credited here, okay, the sales return will be always to be debited. Okay, so now you should understand that from 2,10,000, the purchase return to the extent of 20,000 has to be deducted, and the balance of the purchases will be shown in the profit and loss account. And similarly, from the sales of 5,25,000, you are going to minus the sales return of 15,000 from revenue from operations and show the balance of the sales in the profit and loss account. Now moving to the next balances here, we have the freight followed by the manufacturing expenses. The freight and the manufacturing expenses will be shown under expenses in the profit and loss account against other expenses. Okay, then we have the opening stock. So this is the stock which is towards the finished goods over here. So therefore the opening stock will be taken, okay, under the changes in inventory. Okay, so the opening stock has to be shown under changes in inventory. And here we have the interim dividend of 25,000. So as I've just told you about the previous problem where the interim dividend was being given, so show the amount of the dividend as a reduction from the profits under the group called as reserves and surplus on the liability side of the balance sheet. Then we have auditor fees. So auditor fees will be again shown as a other expense in the profit and loss account. Then we have the P&L loss balance brought forward. So this profit and loss account balance which is from the previous year will be shown under the reserves and surplus. So show this as an opening balance. Then followed by we have the tools. So the tools is a part of the tangible asset. So show this under fixed tangible assets. Then we have the preliminary expenses. So here the preliminary expenses have is showing an amount of 60,000. So show this amount under other non-current assets under the group called as non-current assets in the balance sheet. Then followed by 14% debentures. So debentures will be shown under long-term borrowings on the liability side. Then we have interest on the debentures. So whenever interest on the debentures is being given, you should always see whether the full amount towards the interest has been paid for the year or not. So this 14% when you are calculating on the debentures of 1 lakh, the amount of the interest for the year is also 14,000. So therefore there is nothing to be provided as as outstanding. Okay, so the interest on the debentures will be taken under financial cost under other expenses, under expenses in the profit and loss account. Then we have investments. So the investments can be shown under non-current investments in the balance sheet on the assets side. Then we have goodwill. So goodwill is a part of intangible asset under the fixed asset. Then we have insurance and taxes, followed by the printing and stationery. So insurance and taxes followed by the printing and stationery will be shown under other expenses in the profit and loss account. Then we have cash and the bank balance, which is a part of cash and cash equivalents under the current assets. Okay, now coming to the adjustments here, the adjustments are towards, okay, the directors proposed a dividend of 25%. So when you are calculating this 25% on the paid up capital, now what is the paid up capital here? 3 lakhs is the capital. So from 3 lakhs, okay, if you are giving a deduction of, okay, if you are giving a deduction to the extent of the call areas which is being provided, that is 16,000. Okay, the paid up capital over here is 2,84,000. Okay, so you get a paid up capital of 2,84,000. So as the percentage of the dividends is always to be calculated on the paid up capital here. So on 2,84,000, if you are calculating this 25%, okay, the 25% of 2,84,000 is going to be 71,000. That means the directors have decided to pay dividends of 71,000 to the equity shareholders. Okay, but there is already an interim dividend which is being paid. Okay, so the interim dividend which is being paid in the year is 25,000. So if you are giving a deduction of this 25,000 from the 71,000, the balance of the dividend which is still or yet to be payable is 46,000. So we will discuss in detail how this adjustment has to be shown. Okay, now let me complete with the remaining adjustments first. That is write off 25% on the preliminary expenses. So here the preliminary expenses is showing a balance of 60,000. So on the 60,000, calculate 25%. Yeah, calculate 25%, and whatever the amount which you are getting, show that amount under depreciation and amortization, and also minus the 25% to be written off from the preliminary expenses from other non-current assets. Then followed by depreciation on the machinery to be provided at the rate of 2%, and also on furniture which is at the rate of 5%. So calculate accordingly the 2% on machinery and 5% on furniture, and show it under, okay, depreciations and amortizations in the profit and loss account, and also minus the same, okay, from the tangible assets in the balance sheet. Okay, now next we have transfer 30,000 to the reserve fund. So as you have seen how we have done the fifth problem, like from the current year profits, or from the total profits which has been available in the company, you have to set aside, okay, 30,000 to the reserve fund. And once you are showing this 30,000 as a deduction, immediately again show it below the working notes, 30,000 to the reserve fund. Or otherwise here I think you have already existing reserve fund of 2,50,000. So as you are going to show this reserve fund under the reserves and surplus, to this 2,50,000 add 30,000. Therefore your total fund will become 2,80,000 in the outer column. Okay, then we have prepaid insurance. Prepaid insurance will be deducted from the insurance, okay, first in the profit and loss account, and then show this prepaid insurance again on the assets side under either short term advances, you can show it, or you can also show it under other non current other current assets. Then finally we have the closing stock, and the closing stock here is 80,000, right? So if you just compare the closing stock with the given amount of the opening stock, right? So opening stock is 65,000 and the closing stock is 80,000. So as the closing stock is more than the opening stock, the difference will be taken as a credit item against the changes in inventory, and the closing stock will be again shown under against inventories under the current assets. Okay, now before I complete this, let me just quickly show you the reserves and surplus working notes. reserves and surplus. So here I'm going to take the profit and loss account. In the brackets, put it as brought down balance. That is the balance which has been brought from the previous year. Then we have take the profit for the year here. So yeah, so the balance of the profit which has been brought forward from the last year is 27,000. So I'm going to write down this amount as 27,000. Then followed by the profit for the current year. So as anyway we did not do completely, yeah, but I'm just picking up the profit and loss account balance from the answer itself, that is 1,24,900. So here 1,24,000, then followed by, now coming towards the deductions here. So the total of these two, thank you. So 1,51,900 is the total here. Now coming to the rest of the adjustments. So first, as we need to minus towards the reserve fund. So let's transfer to reserve fund. So according to the question, it's been given as transfer 30,000 to the reserve fund. Okay, so let's minus 30,000. I'll just put this in the inner column itself because there are some other adjustments also to be given. Then next we have less dividends, because here if you just see the question in this, we have directors proposed a dividend of 25%. So this 25% will be taken as proposed dividend, which is at the rate of 25%. So the total amount of the dividend which the company is declaring over here is 71,000. Okay, no matter the interim dividend is already been paid by the company to the extent of 25,000. So whether it is 25,000 towards the interim dividend, or the balance of the dividend which is to be payable, that is 46,000, the total will come up to 71,000. So here I am deducting towards the proposed dividends to the extent of 71,000. So whenever the company is paying a dividend of 71,000, it has to pay DDT, okay, which is at the rate of 20.56%. So can you just give me what was this 20.56% of 71,000? I'm just writing down here so that you will remember. Yes. How much it is? Is anyone answering? It is 14,597.6. So I'm just considering that as 14,598. Right? Then the next adjustment to be given here is So we have done with the proposed dividend. We have also done with transferring to the reserve fund. But here we have a reserve fund of 2,50,000, which is to be shown again under the reserves and surplus. So interim dividend will be taken directly into the liabilities side, that is under the short term provisions. So how it is to be shown there, I will explain it immediately once I close with the reserves and surplus. So what is the total of this now? 30,000 plus 71,000, plus 14,000. No, it doesn't accept. Okay. Yeah. So I hope the total over here is, I can show this directly in the outer column. So 1 lakh, it is 11,598. So 1,11,598 when it is deducted from 1,51,900. Oh, I'm so sorry. Yeah. So 1,15,598. Yeah. So if you minus this, it is 36. Yeah, 36,302. 302. Okay, so better remove the underlining here because one second. Yeah. Now coming down to this, now we have a reserve fund. Reserve fund of how much? 1 lakh. No, it is 2,50,000. So to this reserve fund, add further. So why it is to be called as further here? Because in the current year we have provided towards the reserve fund 30,000 rupees. So therefore the total of the fund which is to be shown in the outer column is 2,80,000. So 2,80,000 towards fund, and the balance of the profit which has been left over after, okay, after showing the deductions towards interim dividend, and okay, so therefore the balance of the profit which is still available with the company over here is 3 lakhs, right? 16,302. Okay, so this 3,16,302 will be shown in the reserves and surplus in the balance sheet, and whatever we have shown towards DDT, right, the dividend distribution tax of 14,598 will be taken under short-term provisions on the liability side. Then the proposed dividends of 71,000 will be also shown under the short-term provisions, but instead of showing this 71,000, as out of this already the company has paid, okay, in between the two annual general meetings 25,000 towards the interim dividend, then the balance of the dividends which is going to be 46,000 will be shown in the outer column. I repeat once again, under the short term provisions, okay, show the proposed dividend of 71,000 in the inner column minus interim dividend of 25,000, then just take the balance of the amount, that is 46,000, in the outer column. And I think there's nothing else to be discussed in this question. Yeah, that's it, right? So I hope you will be able to complete the problem, because I will send you the solution, I mean the working notes which I have done towards the reserves and surplus. So accordingly, please try to make the working notes for the other groups which is required for the P&L, as well as for the balance sheet, and complete the statements of, the profit and loss account, and prepare the balance sheet as well. Okay. So this is for